This is the Leadership in Insurance podcast, brought to you by FinPro Search Partners.
Insurance companies are businesses and they need to look for the long term and be sustainable.
We went from 0 to 1 and now it's going from 1 to 100.
Insurance as a concept, as a kind of service, is brilliant. The execution is what we're looking at now.
I think the companies that are going to succeed are the ones that are going to understand and master the art of intent.
When we talk about innovation, we lean too heavily to think about technology and we don't think about creating a culture of innovation.
I think innovation is essentially continuous improvement of existing processes and platforms and product.
Right? It's got to be easy. It's got to be seamless.
Good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by not just one, but two guests. We don't often get that on the podcast, and we promise we're all going to play nice, but I'm very lucky today to be joined by Andrew Johnston, who's Global Head of Insurtech, and Freddie Scarratt, who is Deputy Global Head of Insurtech of Gallagher. Guys, welcome to the podcast. Thank you very much for joining me.
Thank you for having us. It's a pleasure.
Well, as is customary, and it's always a bit harder, and I'm just going to do this by where you are on my screen, but AJ, you're closest to me here, so wonderful if you could introduce yourself and what it is you do for Gallagher.
Absolutely, and again, thank you for having us. It's a real pleasure. Andrew Johnston. I run the Insurtech practice for Gallagher Re, which is the reinsurance broking arm of Arthur J. Gallagher, the risk intermediary and consultant. And as part of that role, I run a team of people across the globe who are tasked with unearthing companies that identify with the label of Insurtech. And as part of that process, we vet those companies and see, who's really making a difference and whose technology is really, sort of the best in class, I should say. And Insurtech at the moment can largely be sort of broken down into two distinctive business models. You've got those Insurtechs that originate risk, whether they're a digital insurance company or MGA, and then you've got those that are creating technology for the insurance industry. And as part of my day job, we support both business models. So we're a reinsurance broker for those that originate risk, and for our largest P&C clients, we run sort of pretty in-depth risk consulting programs where, in the process of digitization, if an Insurtech solution that we know of that we've vetted and sort of cut the mustard, we'll make the introduction to that company. And then in addition to that, we do a lot of thought leadership production and things like that.
Brilliant. Freddie, it makes it a bit harder for you to follow, but because I suspect some of it's been covered off. But please, it'd be wonderful to hear you introduce yourself.
Perfect. Thank you, Alex, and great to be on here. Freddie Scarratt, Deputy Global Head of Insurtech at Gallagher Re. I run Andrew's European and Asian side of the business, with more of a focus on finding those risk originating Insurtechs and building them up from a reinsurance capacity side. So obviously, Insurtechs need capital, which is done by the VC and PE university, and we deal with their capacity in paper, whether that's fronting, sidecars, traditional reinsurance. My background is as a traditional reinsurance broker. So this is what I've been doing for the past 10 years, with experience bringing products to market, both at a consumer level and at a reinsurance level. And it's great to be doing that in our industry now.
Amazing. Well, thank you both. And I think, Freddie, that was a really interesting point. I really want to get back to about the role of reinsurance in this community, because I'm really glad we got a chance to do this, because I think I was telling you both, Freddie, you and I met at ITI, and I bumped into about 5 people that day that said, you have to meet the Gallagher Blue team. And they kept saying, you need to meet them. And it all happened. And then we happened to be meeting on the same day. So, so here we are, destined to happen. But I want to start with, we touched on it there in the intros, but I'm not sure who to take this. So I'm just going to throw out questions and you can dive in as to who should take these. But how does Gallagher define Insurtech? Because I think that's really, really important. And I know we sort of touched on it, but we're always scrambling with that here. And we try to the broadest possible view. But really, how do you really define it in your world?
I mean, I think therein lies a whole podcast in itself, right? I mean, defining this fairly nebulous term is a very difficult thing to do. And
Mm.
I think we've got to the point now, Alex, where it's more of a self-identification process. And so if a company feels that they identify with the label of Insurtech, I sort of take the view, who are we to say differently? That wasn't always the case, right? So I launched this same business model at my prior employer, a company called Willis Re, that was acquired by Gallagher in 2021. And at that time, there was a fairly clear distinction around what an Insurtech was. And they were typically smaller businesses that were founded by people that had more technological experience, who were really outsiders looking in, who wanted to fundamentally alter the way that the industry operated on the premise that technology could do, perhaps 9/10 of the workload, right? And I think quite quickly people realized that just wasn't the case, and that insurance know-how, if nothing else, was a hugely important part of that process. However, that cohort, or that first sort of label, as you can imagine, attracted a lot of attention from the private equity and venture capital world. And I think for the best part of about 6 years, Insurtech then became very synonymous with companies of varying technological capability and industry application that were looking to raise lots and lots of money. I think we've come almost full circle, where people really want to try and sort of understand the business, and they really need to have a clear long-term value-adding commercial view on what they're trying to do. But somewhat perversely, the technology has now become the differentiator, right? It has become what defines some of these businesses. So it's a pretty broad space, and I'm a bit of a broken record on this particular topic, but it would be more noteworthy if a new business came into our industry that wasn't technologically enabled. And so to that extent, does the label of Insurtech, run the risk of becoming meaningless, I guess, for one of a sort of a blunt word. And so I think it's part of our role to educate clients around what the value of technology is, and to support those Insurtechs that require risk capacity, and not to get too hung up on, the taxonomic nature of what the label means.
No, I mean, the reason I ask is because it's something we've backed around internally. We say we're an Insurtech specific search firm, and then people go, "Well, what does that mean?" And yeah, we get into that kind of broad topic because we work with innovative parts of insurance carriers where they're saying, right, we're going to build an algorithmic underwriting team. So it's like, we'll look at that. So that's kind of our edge, is that we're looking at the things that are different, that are adding value to the traditional market. But then, of course, we're also looking at kind of like new businesses that are kind of bringing value to the community. So I do sometimes worry that it's a meaningless title. And then the reverse side of that is that sometimes you have businesses that identify as businesses that are not. So I was thinking about climate tech, fertility tech, that are selling insurance products. But because we say, oh, we do Insurtech, they don't want to talk to us. So we're always kind of like struggling with that. Freddie, to bring you into this is what was your journey into Insurtech? And I suppose why the interest as well? I mean, you reinsurance broker. I can see where there's a parallel pathway that you're helping some of these businesses. But what was your kind of route into joining this team and being part of that journey?
Yeah, absolutely. So I joined a startup reinsurance brokerage firm called Capscom Re back in 2017, then run by a man called Rupert Swallow. And as a startup firm, I think I was employee number 104. We all had to do lots of different stuff. We didn't have marine and energy and all the traditional classes of businesses. So I was part of a kind of quasi panel who looked at interesting new opportunities as they came in, because we just didn't have the amount of people to have someone focused on that. And as part of my background in credit and mortgage reinsurance, I started getting involved in some more of the esoteric risks we were seeing at the time, such as guarantee insurance out in the US, and slowly built up a small portfolio of Insurtech clients without even kind of knowing that they were Insurtechs. They were just good businesses growing and needing reinsurance, and we were able to help. And I was then offered the opportunity to join Andrew almost a year ago now, by our global CEO, who said, given that background in traditional reinsurance broking, having the experience of working with some of these startups, and a healthy amount of skepticism over business models, which I think is always helpful in our industry, it seemed like an obvious step. And AJ's done a fantastic job of building out the team here at Gallagher Re and back at Willis Re, and the next frontier is pushing what he's built in the US out into Europe and Asia. And I couldn't turn down that opportunity, quite simply, and it's been a fantastic past 9 months doing it.
Yeah, amazing. You both touched on at the outset the differences between the US. Probably it's a more mature part because AJ's based out there and been pushing that, and as you say, Freddie, trying to push it out. But inherently, is that the difference? Freddie, you're focused more on kind of risk-bearing entities. AJ is more of a mix of kind of technology and risk-bearing, or kind of more like reinventing the Insurtech model. But are there any other sort of underlying differences that you see when it's approached to Insurtech that are sort of obvious in the way that it's approached?
I think part of it is our backgrounds, right? As a broker, I'm obviously going to start my new role at trying to identify those risk originating Insurtechs, because those are what I'm most comfortable dealing with and best being able to network within Europe, for example, which is really where my focus is starting off. Europe and Asia is such a big place. I have to sort of focus somewhere. As the role matures, and one of the things which I've been taken by surprise about is actually how much time I'm spending looking at analytics SaaS products. So there's a real need for new ways of looking at cat analytics and new risk and how do we model those. I'm spending a lot of time internally working with Gallagher Re, looking at, well, how are we going to help our clients utilize these new technologies? And so, we talk about the risk originating insurance to the broker because that's exciting, but actually as much as important is looking at those softwares which are going to help Gallagher and help our clients too.
Interesting. And AJ, what do you see? Is there what's your view on that? Is there sort of these gaping differences, or is it just the different maturity within the business of where Freddie's coming in to build that up versus kind of like you've been focused on the US maybe a bit longer?
Technology by its sort of definition is transcendental, right? So I think it's more a reflection of the underlying market, the incumbent landscape, and where those companies can play a role. I would say that the US, certainly from a venture perspective, has been sort of light years ahead of the rest of the world, and so there's been a lot more capital in this part of the world to have what I would call sort of developmental disposal and sort of test things out. But I would say that there's nowhere in the world as good as London as being a concentration of venture capital, insurance know-how, technological capability, etc., literally in one city. And so I think the world kind of presents this wonderful opportunity to us, and it's our role as a global broker who has a very privileged position on the entire market to sort of try and make the best of what appears regionally. And one of the reasons why Freddie's been so impacting is that we do need a different strategy in Europe than the one that we have in the US. And with the best one in the world, and not that it should matter, but the fact that I am in the US does make a difference. And so having that local presence, I think, has been really fantastic. But you need to know what the market wants, right? And so the UK market is different from the German market. And so, the sorts of technology that might be really, really relevant in the UK would be fundamentally different in Germany. Similarly, when I first moved to the US, I couldn't believe that, digital price comparison sites were a relatively new thing, right? And this was 2017, 2018. I don't think anybody in the UK has bought personal lines insurance through an agent since about 2000, right? And so there are just different things going on. And it's our role not to kind of just have this generic clunky strategy and just roll it out world round. It's about trying to understand who needs what where, because we're ultimately trying to add value like everybody else.
Yeah, I mean, I think, our prior calls we echoed, it was kind of really interesting how we gravitate the same ecosystem, is that we follow VC and then we help them with talents, supply. You're working with them on advisory and kind of reinsurance and it's not the same. I mean, I'm sitting here in New York at the moment because our clients are here, and I don't think it should make a difference, but it does make a difference. It's one thing to say that you're US focused, but then you've got to put boots on the ground there. So, you having that global outlook, I think is so helpful to your client base. One thing I wanted to touch on, and look, I won't lie, this feels like a gentle toss of the ball for you both to hit it out of the park. But I thought we had a really interesting conversation about reinsurance and from your position. And we see businesses and we speak to businesses that are startup really struggling to get that reinsurance placed and really struggling with capacity conversations. And they don't seem to kind of want to engage with the reinsurance broking community. So kind of, I was wanting you both to kind of maybe tackle that and say, why should they use a reinsurance broker? But maybe give us some balance, because it looks like I'm just, tossing you an open goal.
No,
But
thank you.
what's the feedback you get that people don't,
So I mean, I think for us, it's all that there is a lot of self-selection, and per our earlier conversation, being close to the VCs is great, right? Because they're doing a level of due diligence that ultimately we would be doing in some shape or form, and so kind of having another company's buy-in is huge. And I think with reinsurance in particular, I mean, just the fact that a lot of Insurtech leaders who want to originate risk don't necessarily know what a reinsurance broker does, is a bit of a signal to us about how that company might actually ultimately end up sort of developing. And so sometimes when they're kind of brought to us kicking and screaming, that's a bit of a red flag to me. But the Insurtechs that really understand our industry and understand the value of a reinsurance broker, we sort of want to work with them together and grow or help grow their business as best as we can. Unfortunately, because this is the risk business, people that are ultimately taking on balance sheet risk want to know that the underwriting chops are there in the company, that there's some view on what loss ratio data might look like. And for some of these nascent businesses, Alex, that's not always the case that it's there readily available. Similarly, they might want to be sort of really turning underwriting on its head, and that can scare some risk capacity partners. And so it's our job really to try and help make the market, right? It's to sort of manage the expectations of the Insurtech, let them know how the ultimate risk bearers might be feeling, and then find the right markets for them, or the right growth partners, I should say, for them. But with the best in the world, I mean, Freddie and I would love to be reinsurance broker to every single Insurtech, but we have a resource issue as well. And so we're looking to work with those Insurtechs that really understand the value of reinsurance broking, and understand that what they're paying for is a highly valuable service from us. Fred, I don't know if you've got anything to add to that.
Yeah, I think, a lot of people's interactions with insurance is transactional consumer insurance, and therefore not knowing that a reinsurance broker, not really knowing anything about reinsurance, let alone what a reinsurance broker does, definitely means that they don't come to us first. And the biggest issue I find with that is I'll meet with Insurtechs who have said, oh, I've spoken to Swiss Re or Everest Re or Partner Re, and I've spoken to X, Y, and Z, and that's not the right person they should have spoken to, and they don't know that, but then they've already pulled the trigger for that company and received no. And so you basically get one bite of the cherry at these organizations, because a lot of them are very linked up, and if you get a no, it's going to be a no from that company. And so we know who to talk to at what company, and what company writes what, who's looking at embedded insurance at the moment, who does like pet insurance. Without our knowledge, you're going to get a lot of dead ends, and you might only meet dead ends before your cash runs out. So we are able to give you access quicker, faster, and more targeted. And the problem is there's a cost to that, right? It's 2.5%, maybe 10%, depending on what the structure of the reinsurance is. And some people at the start of their businesses don't want to pay that, but then they often lose out on getting access because of it.
Yeah, and quite frankly, I mean, I sort of say this to Insurtechs all the time. I mean, if we get them access to cheaper capital, then it's a net gain, right? I mean, but it's so, and it's such a trite statement, right? When you lay it out that way, but unless you've seen the transaction, you might not know that that's the case. And I think the other thing that we've seen is that, back in the earlier days of the Insurtech, I don't want to call it a bubble, because I don't believe it was a bubble, but let's say more hyped, more froth. There were a few reinsurers that kind of had under one roof this sort of entire ecosystem for Insurtechs to basically plug a program of business in, start writing, and that was it, and everything was sort of hunky dory. And then it wasn't, right? And it wasn't very, very quickly. And some of these reinsurers said to their program MGAs, look, in 6 months' time, we're not going to be continuing this placement with you. And I think that there was a real reality check for a number of founders that, just because somebody said yes to something once, it doesn't mean in perpetuity it's going to be great. And so building these relationships with the multiple different reinsurance markets, even if they don't bind your business first go round, or building your relationships with reinsurance brokers so that your name, should you need something, isn't being seen for the first time, is really, really important. And I think the founders that understood that quite quickly have done extremely well. And it's no accident that our industry is a highly syndicated pool of shared risks, right? I mean, and Insurtechs are not uniquely separate from that if they want to grow. And I think that there has been a real reality check in the marketplace. And I would say, compared to even 5 years ago, Alex, I don't feel quite the same anti-gravitational pull, let's call it, for some founders as I do now. I mean, people now are like, yeah, absolutely want to work together. But sort of 5 or 6 years ago, to Freddie's point, it was like, well, why would I give you a couple of points for something that's really straightforward? It's like it's not. And even if your experience right now is that it's straightforward, come back to me in 12 months' time and see how you feel. It's fascinating.
I mean, there's so much to echo with my industry, which I find fascinating. I mean, there's always it's the services in the middle, and we have some of the same things. Firstly, it's kind of self-selection. I'm not going to kind of try and convince someone that they should retain someone to provide them with talent, because that's just the wrong client. The value's not seen, so you have to kind of just move on. And then when you do, it's like, this is a net gain. If I find you the best talent in the market, you make more money, you grow faster. It's all of those things, and it has so much in there, but you don't want to spend too much time educating, because if you have to educate, you're probably talking to the wrong teams. And to your point, I think 5 years ago, I saw exactly the same things in that it was grow at all costs, but because it was easy, they didn't need as much support, and now it's more challenging. But I think the teams are different, and there's much more. No one's trying to beat the market or show the market that it's wrong or reinvent insurance. People are now going, how do we work with the industry, but maybe have a slightly different distribution play, have a slightly different analytical advantage, have a different data point that we can create a new product from. And it is much more collaborative in this kind of Insurtech, however we define it.
Yeah,
I think I think also to kind of flip around what we were saying to a much more positive point of view, for those Insurtechs who get it, they want to grow hugely over a very short space of time. And it means we take one of their main barriers to that, which is finding a huge amount of capacity away from their core business, which they need to focus on. And we do it. So we can grow them from 1 million to 250 million over a short amount of years as we work with them building out. Some of the biggest success stories in the UK, Marshmallow, Many Pets, these Insurtechs have grown hugely and very quickly. And we can manage that growth of capacity by having conversations with carriers a year, 2 years in advance of them needing them, but prepping their way. You have VCs who only like Series A, Series B, but they want to know what's happening at seed to start that story internally. It's exactly the same on our side. So, there is the kind of negative side, which is, can they or can they not even get started? But then once they are, we need to help them manage their growth. And we can do a lot of that in-house at Gallagher Re, which then they don't need to worry about at that level.
Yeah,
the maturity of this, Alex, I think is key, right? I think almost by definition, people have got to see the rough with the smooth to understand why all these moving parts exist for the reasons that they do. And just because I always have to mention alpacas on every podcast I do, I will give you a sort of small analogy. So before doing the reinsurance thing, I was an alpaca shearer, and did it for a long time. And it wasn't uncommon for us to take on a new client and then the next year us not get repeat business. And but then get the business in year 3, and would go back in year 3 and say, oh, why did you bring us back? And they said, you made it look so easy, we thought we could do it ourselves. And not only is it not easy, but the product was awful, right? The fleece that we brought off, we couldn't sell it. And it's a lot of work, and we realize just how valuable it is to have somebody lead us through this that really understands it. And you know, in that moment, they thought that they were paying for 3 minutes of my time per animal, but they weren't. They were paying for 10 years of experience that I got down into 3 minutes very, very well, right? And I think your industry is something similar, but people have almost got to experience that rough to appreciate the smooth. And I don't think that insurance and reinsurance is so different. But I go back to this point. It is not an accident that our industry looks the way that it does. It's by no means an accident that we have intermediaries. It's by no means an accident that deals get syndicated out across so many markets. It's by no means an accident that there are so many insurers and so many reinsurers, et cetera, et cetera, et cetera. And I think a lot of Insurtech founders came in originally quite naively and looked at all this and said, you can just automate all this. You can digitize this. All you're trying to do is match risk with capital. It's so easy, right? And I think that there has been a bit of a rude awakening over the last decade.
Yeah, completely. I've lost count of the amount of people that have said, "Oh, we probably won't need your services anymore, Alex, because we've got LinkedIn recruiter licenses." And then 2 weeks later, they're like, "This is hard," and I'm like, "Yep, yes, it is." But anyway, that I won't go off on a tangent. I want to shift gears slightly and talk about the reports, which you guys are really well known for, like brilliant reports. It's always quite a big deal when they come out. Yeah, lots of gossip between me and my kind of network about what does it mean. What's the next Insurtech report based on? I think it was growth and valuation ending in 2023. Yeah, what's next? What can we look forward to?
Freddie, why don't you take this one?
Sure. So, yeah, excitingly, our next report comes out first week of May, which I think is a couple of weeks before this comes in, and we are focusing in on AI, which is probably not a huge surprise to everyone who's been listening to this or been reading anything about Insurtech. It's basically been the thing everyone's been talking about for the past 12 months. And the reason is it's starting to have an enormous impact on our industry. And we feel as trusted advisors to our clients, which is what us at Gallagher try to be, it's our responsibility to have informed conversations at the broker level, not just the Insurtech team, every broker within our industry, within our company, about AI's potential impact, application, and importantly, its potential pitfalls and issues. The issues around bias, the issue around data, they're all really important things. So we are doing every quarter this year based on AI. We're taking a part of the reinsurance business per quarter. So Q1 is distribution, Q2 is risk and underwriting, Q3 is what we've called kind of business operations, and Q4 is the all-important claims and settlement. And we're hoping through those 4 quarters we can offer a new way of looking at how to think about what you're doing with AI. And I can say this because I didn't write the introduction, and Andrew's going to blush, which none of the listeners will be able to see, but it's really good. I think it's a really good framework of how to think about AI. It's not giving you the answers, it's just giving you a way to think about it. And we were very lucky to get some really good thought leaders as well in on it. AJ, I don't know if you want to add anything to that.
No, that was very kind of you to say that, Freddie. But just to kind of echo Freddie's point, I mean, we try and talk about topics, Alex, that are really sort of top of mind, contemporaneously important, and we just had to do AI, right? I mean, it had to be this way, and I think that Insurtech and artificial intelligence will increasingly converge, and so it's a wonderful platform for us to kind of share our thoughts with clients. And yeah, we're trying to take a very pragmatic approach, right? I mean, it's such a broad topic, and I think if we aren't disciplined about how we think about AI, the label at least might go the same way as the label of Insurtech, right? And that's a real risk, because I think it's difficult to precisely select technology and understand what an inherent technological capability is if you don't use disciplined language. And so we're trying to offer a sort of nexus to the reader where, at the very least, we hope that they're a bit better educated about what the different facets of AI are, and inherently where they might be best deployed relative to that part of the value chain that Freddie was describing. And so, just to give you an example, chatbots are probably better deployed in distribution and claims than they are in central business operations. Now, it's a very obvious thing that I've just said, but we kind of take that view with many different kinds of AI that we're talking about in the report. And it's really exciting to be able to kind of bring our insights to the masses.
I think one of the challenges is that, yeah, as you were both defining it and discussing it there, the report and breaking it down into the segments was, I think one of the dangers of the conversations I've had is they've been so broad, and also they all go synonymous to like LLM models and saying our GPT type solutions, and it's like overly complex, it's overly all consuming, and I think the importance of breaking that down and seeing where are the wins that, let's realistically say that you can't roll that. A lot of these are harder to roll out than others. So rolling out an AI solution that helps you on one element of your operations is probably more impactful than trying to make some wholesale change across your business. And it means that you can actually walk away with kind of like meaningful insight that you can actually apply to your business today, as opposed to saying there's this huge kind of wholesale change that we need to make in the future. Within those four segments, is there an area where we're further along in that AI journey? At this current moment in time.
I think in terms of actually seeing serious returns, I would say that claims is probably the area where AI has had the biggest impact, closely followed by distribution, which is the most recent quarter, specifically around putting the various signals and triggers from potential buying behavior into an environment where an individual in the loop can make a targeted sales approach. I would say where it ultimately will have the most value is in risk. So that's pricing, underwriting, and portfolio management. We are making some great strides, I think, particularly around what I'm calling bionic underwriting, which is where AI supports the human. And I think we're getting there, but we're nowhere near the kind of holy grail that people have been articulating for over 10 years now. But if we can get that right, I think AI could have a huge impact in the risk part of the business. And then I guess in fourth place, that kind of leaves central business systems, which one could argue AI has less inherent applicability towards, because at that point you have an assumed amount of data that is just waiting to be triggered. But we are seeing some wonderful applications of AI in central business operations. So my instinct says that the kind of FNOL claims fraud detection piece is the furthest along, Alex. But who knows, right? I mean, it's something could come out tomorrow and sort of turn this all on its head. And that's why this is so exciting, because I feel like Freddie and I are kind of living and breathing tomorrow's world, which is really exciting.
It's that nice part of being in this space where you can kind of look at them all, and because we take a similar, very broad view of it, we're looking at all these things, and you kind of want to piece together your ultimate kind of transformer insurance related business, where you go, it'd be great if you could have this claims technology and this operational technology. Do you think the claims impact is just because the spend is so high, so therefore the kind of net kind of return? Exactly.
Yeah.
I mean,
I think if you're a massive, multi-billion-dollar P&C carrier and you can reduce claims fraud by 2%, that is a very meaningful return on your investment, right? And that's not a number that I picked out the top of my head. I mean, that's real. And so, and similarly, for some people, that might be the second time that a policyholder is in communication with an insurance company, right? The first being when you bought the policy to begin with. And it's really where insurance companies can demonstrate their mettle to their policyholders. And so if you can improve the claims handling experience through use of automated technology, you're much more likely to keep that customer, not because the good experience keeps them, but because the bad experience pushes them away. And I think that's an important distinction.
I think from a management investment point of view as well, it's quite binary, i.e., is our spend on a technology giving us a return against what we're spending on claims, yes or no, and therefore it can be judged accordingly at a management level. Other types of AI investment within a company, it's a lot harder to quantify its impact over a short amount of time. And there, from a management decision point of view, are you going to invest there now, or are you going to invest in a new underwriting team or something like that? So I think the claims side of things has just benefited from a slightly clearer strategic mindset, which we expect as levels of understanding increase will roll out along the other, 3 types as well.
I think that's a brilliant point, by the way. I think I couldn't agree more. I think it's a very clear return, right? And it's something where, as a result, people are then prepared to do more, which is possibly why it's further along. I think that's an excellent point, Freddie.
Yeah, I mean that last point there, Andrew, is one that I was going to kind of go in on. Is like, how important is it to get a win that's really binary, because what impact that makes on the culture of embracing change. Because you can implement all the tools that you want, but we all know that it's really about whether people are going to embrace them and use them. Because we've all worked in businesses where they roll out new technology, which probably does all the things you need it to do, but then people don't embrace it and don't utilize it. So if you get that binary win-loss that you'll get from a claims investment, then it's a much easier kind of sell, even from a cultural perspective.
I would agree.
Sorry, no, please.
I mean, the community has got to come out to support the innovation. Otherwise, it's not really innovation. It's an idea in isolation. And I think most leadership teams of major insurers and reinsurers are now very aware of just how important a technology strategy is and how important it is to invest in this properly. Having said that, the mindset of particularly stock companies is still, again, almost by definition, at least quarterly myopic, right? And technology can be a 10-year project. It can be a project that is extremely expensive. It can be a project that evolves. And I do think it's important to have whatever you define as a win to happen quickly, because I think that gives people a level of confidence that they are investing in the right thing.
Yeah, the little incremental wins kind of drive that sea change across the business. Gentlemen, I think we could do this for hours at a time, but we should probably call a time on it, because we know people stop listening after about half an hour. I think we've reached time. But look, thank you so much both for coming on. I'm really pleased we got a chance to do this. I'm pleased that we got the chance to do it together. So lessons to take away: use a reinsurance broker, embrace change, and please read these reports, because genuinely, if you haven't had a chance to read them, if you're interested in this podcast, you'll be very interested in these reports. And yeah, they are. Don't want to embarrass the gentleman here, but they are very well written, and they're always kind of a good read. So, thank you both very much for being a guest on the podcast.
Thank you for having us.
Thanks, Alex, very much.
Appreciate it.
Perfect.